Two people not married, different jobs, different credit scores, and no shared bank account. Most people in this situation think that they can't buy a house together, or they try to put it in one person's name and then they leave the other person off because the thing is that they just don't want to deal with having to go through all of that paperwork. Both of those things are actually bad moves. These two people closed on a $470,000 property in North Carolina with both names on the loan and both names on title. Here's how we did it and why more couples should actually be doing this. My name is Ricardo Carrillo. I'm with RC Lending Advisors, and every single week I break down the real deals that my team and I have closed across all 50 states. Let's jump right into it. These two buyers are partners, but they're not married yet, and they wanted to buy a home together in North Carolina. They came to me and asked, can we actually do this without getting married first? But the short answer is yes, and what people don't know is that you can actually have up to 4 people on one loan at a time, and there doesn't have to be any sort of relationship between anybody. On a regular home loan, the bank actually lets you have up to 4 people on a loan, and you don't have to be married, you don't have to share money, you don't even have to be related. You just have to both be willing to sign your name on all the paperwork for the house. Both buyers on the loan, both names on the deed, and both signed all of the paperwork. That's what people in the mortgage world call a co-borrower loan. It's not a special loan program, and it's really not complicated. It's just the right way to set things up when 2 people are buying together. And oftentimes our clients actually will even move the properties into an LLC after closing because they want to have more protection and more ownership structure over who's doing what in that partnership. But here's where it actually pays off, because when you have multiple people on the loan, you can use everyone's income. You can also look at every single person's debt, right? So we look at everyone's income, we look at everyone's debt, and then we have to go off of something called DTI. DTI stands for debt to income ratio. It's basically how much you make compared to how much you owe every single month. Banks use that number to decide if you could even handle a mortgage payment and if they want to give you the loan. 2 incomes are always going to be better for the debt to income ratio, but if one person has more debt, it could actually hurt the pre-approval. It just means that you always still want to analyze what we're doing, and we want to still make sure we're running those numbers and we're reviewing everything to verify that you guys are good to go. Because when you have 2 people on the loan, the bank's also going to use the lower of the 2 scores to be able to give you a specific interest rate. So if one person has great credit and the other one is so-so, the rate that you're going to get is typically based off of the lower of the 2. This is why my team and I will always run the math both ways before we've even started the application, because sometimes putting both people on the loan is the smart move and sometimes it's not. I've told people multiple times, let's just run the numbers both ways and then let's split everybody up. We'll see how much do you qualify by yourself, how much does the other person qualify by themselves, and then we'll put them together and see how much do you qualify for together. At the end of the day, it's just a game plan that we're creating. Now, here's the specifics on this deal. It was a $497,000 property. We did a minimum down payment, and so we ended up having a loan of $472,000. Loan type was a 30-year fixed. It was a primary residence interest rate, and we actually ended up getting a 7.8%, which is really high. Monthly payments for the loan came in at $3,400, including HOAs. It was right around $3,800 a month. Now, this property is in something called a planned community. That means that there's an HOA, which is a homeowners association, and the homeowners association charges monthly dues for things like lawn care, community pool, and other shared stuff. The HOA dues count, though, as a part of your monthly payment, and it's important to use that in your calculations when you're trying to see if you want to rent the house out later. And a lot of buyers don't realize that HOAs and those fees could actually impact your pre-approval. They get to closing and they realize their payment's way higher because of the fact that now we're accounting for HOA. And so we always include HOA fees and dues in our math from the very beginning if that's what someone's looking for. These 2 people knew exactly what their monthly payment goal was before they were even going to that point, and so there was no surprises at closing. There's a version of this story, though, that happens all over the country right now. Couples who are not married, friends want to buy together, siblings want to buy together, people want to invest in real estate together, strangers even are wanting to invest in real estate together because it's hard for people to qualify for it individually. People want to own real estate with somebody else, but they also don't know if they can. And you don't have to pick between buying alone or not buying at all. If 2 people want to buy together, we can make that happen. Both names on the loan, both names on title, and both legally own the property. The key is setting it up the right way from the start, though. Knowing who has the better credit score, what score is the bank going to use, making sure that people understand what they're signing, getting the deed set up the right way so that both people are fully protected and have no surprises. That conversation has to happen before we've even started your pre-approval, though. If you're thinking about buying a house with a partner, a friend, a family member, a business partner, here's the 3 things to bring to the first call. The first one, both of your credit scores. We need to see them. And so we need to see if we can decide on who we are wanting to put on the loan. Is it going to be both of you, or is it just going to be one? 2, we want to make sure that we use both of your incomes if we can. We'll run the math with both people's incomes included so that you can know what you qualify for together versus by yourself. And then number 3, how do you want to own the house? There's different ways you can share ownership. You can set title differently. You could do an LLC. You could do a land trust. You can do a real trust. There's so many different things that you can do when it comes to this setup. And so we could talk to a title company. We could talk to an attorney. I'm happy to give you the resources that my clients and I have used. And then we'll see what makes the most sense. Now, these 2 buyers did it the right way. They understood what they were signing. The loan was clearly set up and they closed without any drama. And then they're actually going to move it into the name of the LLC. The purchase price was right around $497,000. Loan amount was $472,000, 7.8% interest rate on a 30-year fixed loan. Monthly payment was $3,400. And then the total cost, including taxes, insurance, HOA, and everything else, right around $3,800 a month. The thing is, though, that both these buyers were not married, and they both ended up on the loan and they both ended up on the deed. So you don't need to be married to buy a home with somebody else. You just need to know, how is the bank going to review all of your stuff? Now, if this is something that you have no idea how to do and you want the help with, my team and I are here to help you. We've done this countless times over and over. Head to rclending.co. You can reach out to my team and I. You can follow us on Instagram at Richie the Lender for these Deal of the Week breakdowns every single week. Again, my name is Ricardo Carrillo. If you stuck around this long, I very much appreciate you. And if you haven't watched my other Deal of the Week videos, you can check those out either here or here. And I will see you in the next Deal of the Week.